What's up, everybody? It's Dave P with the Cream, and we got a big day ahead of us. Today is the day Mr. Jerome Powell, chairman of the Federal Reserve, had their big Jackson Hole meeting. If you follow interest rates and follow the Fed, I'm a huge nerd with this stuff. I've been looking forward to this day. This is like a Super Bowl day for me. And at
Yeah.
10 a.m., Mr. Jerome Powell came out and spoke. I'm going to share my screen real quick before introducing my financial expert today. But basically, the Fed came straight out and was like, we're lowering rates. Liz, are you able to see my screen?
Yes.
Okay, check it
The
out.
news we've
So,
all been waiting for.
well, it's just crazy. A lot of us as real estate investors, it's been business as usual. We've been crushing it, but this is going to make it a little bit better. I've already got 4 people hitting me up as far as like, what does this mean? And I'm just
Yeah.
sending people to you, Liz. You do a lot of investor loans. So we're going to be asking you what this means for investors. But essentially, the headline that we are reacting to and we're all excited about is they came out today and basically said the time has come for interest rate cuts. That is Mr. Jerome Powell there in Jackson Hole. And who I have with me here today is Liz Lawrence from LFG. It is Liz. What is LFG? When I hear LFG, I think let's
You think what you
go.
should think. Yeah, you
Yeah,
think what you should think. But yes, technically it stands for Lawrence Financial Group. I always laugh because technically when we came out with the company name, I don't know that I immediately thought that. My wife did, and I like died laughing. I was like, yeah, that's kind of the energy.
I love it.
So we're a mortgage brokerage that focuses solely on investment real estate lending. So we don't do any primary residence stuff. And so all of our products are very investor focused. And so this is incredible news. This is the news that we've all been waiting for. Honestly, this whole year we were expecting 4 rate drops. None of those came yet. And so honestly, this is coming at the tail end of a lot of the things that were happening 2 weeks ago. So we had a little speed bump, I would say, about 2 weeks ago when Japan increased their rates as well.
Yeah,
They increased it. So they have been at zero
yeah,
for years and years and years. And they
correct.
increased it by a quarter, which actually definitely put a ripple in a lot of the markets. And so you saw significant percentage drops in our market personally because of those changes in Japan. And so 2 weeks ago, we saw a full percentage point drop in interest rates. I mean, Dave, I haven't seen drops like that since we're talking like COVID days, which let's not go back to there. But at the same time, I think these are huge moments for investors in multiple capacities. I mean, I think there's aspects of, okay, have you been waiting to refi to take cash out of properties that you've gained a ton of equity on? And will that cash give you some trajectory to acquire more doors? I think we talk about all the time that we've had a lot of clients that have been holding off because they have these just downright sexy interest rates in the threes and fours and stuff. And I question them sometimes of like, are you limiting your potential by not doing some of these transactions sooner? Well, I think the great thing is a full percentage point drop in interest rate definitely gives everyone a piece to kind of chew on and say, okay, is this the time? And we're not here to make those decisions for you. We are here as a lender to give you all the resources you need to make a sound decision yourself.
Let's talk about buyers because a lot of people watching this and us ourselves, I mean, we're active in the game. We're constantly finding off market deals. This is what we teach you how to do over here at the Cream. We
Yeah.
find off market deals. We buy these properties in their as is condition from motivated sellers. That's how you're going to get a good deal on a property. You make it convenient for the seller. You say, hey, I'll come in and buy your house for all cash. All of our marketing all over the internet and everywhere, us as real estate investors, that's what we pitch. We buy houses fast for cash. So
Exactly.
when we're buying these houses, I want to talk about the financing for acquiring these as is assets. And then I want to talk about rehab money. So, how we get the money to fix these properties. And then, if we're turning around to resell this property, what lower interest rates mean. I mean, cat's out of the bag. It's going to mean more buyers for our
Yeah.
product. But let me
Yeah.
take it to the front end here. When we're out there marketing, we buy houses fast for cash. We got a motivated seller. We got a property in contract. That's a great deal. We bring it to you. What does this look like to get the money to get these things closed?
Yeah. So again, we specialize in everything from short-term financing, like rehab loans, bridge loans, and new construction. So all of that short-term financing. Those are for properties that need some work done to them. And honestly, if you're an investor, those are the deals that you should be
Yes.
chasing. To buy something turnkey is not strategic. It's not. Now, is there anything wrong with buying something turnkey? No, because every investor is going to have their own risk tolerance. And so we talk a ton. I mean, honestly, a lot of my job is not talking about products and interest rates and all these things, though we're going to highlight that today because of the news. But a lot of this is figuring out who you are as an investor. What's your risk tolerance like? What kind of projects do you want to take on? What are your goals with taking on these projects? Because I think too often investors get in this space and they start drinking the Kool-Aid, and no offense, the Kool-Aid tastes great. But after a while, I kind of say, what's the end goal? What are you trying to accomplish? Do you have milestones in place? And so really kind of figuring out, what is your plan? This off-market deal lands on your lap. Are you going to flip it? Are you going to burr it? What is or wholesale it, especially in your guys' space. So our short-term financing options are going to be used for flipping and burring those properties. So if you decide, hey, I'm totally comfortable with a construction deal where I have to do some rehab to the property, I have a great contractor that can take care of this and get this done timely, we're going to position you in a hard money loan. I will say rates in that space don't fluctuate as much. So you're looking at 10 to 12% interest rates. And I would say they're not driven based on prime. They're backed by typically large hedge funds, et cetera. And so to be honest, they're going to make their money one way or another. And so those rates are going to probably be the last things that drop. But gosh, if you think a couple years ago, 10 to 12% is the standard. I mean, those used to be 9 to 11 during COVID. So I do think at some point we'll see a drop in hard money rates. But to be honest, you're not in those loans that long. So it matters, but it doesn't. I would say in that space, with us as a broker, with us working with 40 to 50 different lenders, the nice things that we can do with that is we can find low down payment option or no down payment options. Yes, I said potentially I could offer 100% financing. So that means I'm financing the purchase price as well as the rehab, depending on credit and the after repair value and the location of the property. Alternatively, you can also acquire properties that maybe the rehab is more than the purchase price. We don't only work with 1 to 4 family properties. We can actually lend on 5+ and commercial deals as well. So it's really just figuring out what is a good deal in your eyes. And to be honest, I think with these market changes, we're going to see more deals out there, which is great because, again, in general, we've been in a housing shortage. I think, thankfully, in the investor space, there's been a good supply of deals, but I think that's going to definitely increase because a lot of what you just talked about was the latter side of this, the end buyer. If you're flipping that property and you're planning on selling it to a white picket fence family, those buyers have been holding off and holding off and holding off, waiting for rates and for things to become more affordable. I question if that was the right play, but
I don't
here
think it's
nor
going to
there.
happen. Yeah.
There's definitely going to be some more buyers out there. So that's going to help our flippers flip more and make more money. It's also going to open up opportunities for our individuals that are burring the properties. So that's in regards to, hey, I want to buy this. I want to rehab it. I'm then going to rent it. And I'm going to hold this long term. We also have lending products for that because honestly, rents are continuing to increase as well. So this is like a win-win across the board.
Let me back up to a little bit of what you said there. And first off, everybody, we've done over 1,000 real estate transactions. I'm not saying this to brag. I'm here to let you know we still pay 10 to 12% on the loans that we get. It's not a big deal because when you're buying at deep enough discounts, and that's what we teach you to do here at the Cream, go off market, get off market deals, buy at deep discounts, right? No one ever got rich by paying too much for anything, right?
Yeah.
But we still pay 10 to 12% to our lenders. It's very common. And it's also very common to have to put some skin in the game when you're getting the money that you need to buy this as is deal. And Liz just mentioned, 10% down, that's pretty common. But then I heard something, it made my ears perk up like Pavlov's dog over here. And for 100% financing. So before you kind of explain what this is, I'm here to let
Yeah.
you know 100% financing, it doesn't matter what the interest rate is. You could charge me, I would take 15% interest and 100% financing over 10% interest where I have to put skin in the game because
Yeah.
the way to scale, if you're doing multiple deals and finding multiple deals, it is way easier to do multiple deals and scale when you're getting all the money you need. 100% financing. You got to think, if you're putting skin in the game on every single one of these deals, eventually it's going to kind of cramp into your lifestyle. It's going to get into your
Yeah.
operating capital and whatnot. 100% financing, though, I personally would gladly pay a much higher interest rate for that 100% option. Are you saying that you have resources and money
Yeah.
for 100% financing? So an investor like myself can find a great deal and get all the money that we need for purchase and rehab construction. I'm not out of my pocket whatsoever. I turn around and sell that property or refinance it, and I get all my profit or all my cash out refi. I was into this deal for none of my own money.
Yeah. Yeah. I was wondering if you were going to hear that teaser. So
Oh,
yes,
I'm all
we we've been
bells ringing
we've
over
been
here.
waiting. Again, 100% financing options were available, I would say like pre-COVID. They went away and now they're starting to come back. And so yes, 100% financing, you're probably going to be limited to 70% of the after repaired value.
That's fair.
Honestly, that's probably about where you want to be naturally
Correct.
to make some decent money on a transaction. So can't say that enough. If you're going all the way up to 75%, which is traditionally where some lenders will max out at,
Yeah.
not making a ton on that deal once you kind of put in all your cost and really break that down. So 70%, I would say credit, at least 700. We can still get that done. I would say location is probably going to be the biggest factor. We're just looking to be in major metros. So if you're looking to invest in some of these smaller town areas, that product may not be the best fit for you, but we have other products that will work. They'll just require a down payment. I'm not going to gouge you on the interest rate. We're going to be at like 12.75. So
Yeah,
not
the
an issue.
interest rate is less relevant to the deal than the amount that you're getting, and then the ease of doing business with the lender and the speed in which you could get the money that you need to acquire a property and rehab a property. That's essential. That's more
Yeah.
important than the rate. In fact, when I get new students and new people asking us, oh, what rates do you pay? I always say, I pay the same rates that you pay. It's not about the
Yeah.
rate, it's about the availability and the accessibility of the money so we could go out there and fulfill our offers to these motivated sellers. We can close quickly. How quickly could you close? I bring you a deal that's a good deal, and then what would I need to bring you for you guys to underwrite and kind of do this thing?
Yeah. 2 weeks to close. And I would say that's the standard for all of our hard money. Now, do we have lenders that'll close faster? Sure. And if you need like crazy, crazy fast, we have those options. We can exhaust those. I wouldn't say that's this. And so most of the time, as long as I tell the client where we need to be, they can align the contract to that. So 2 weeks to close on that kind of transaction. And you hit the nail on the head, honestly. If you're looking to scale, if that is your goal, using hard money is one of the easiest ways to make that happen. Instead of using your own cash, please don't use your own cash. It doesn't make sense. You're going to be so disappointed in yourself when you do that first deal. You go all in cash, and then all of a sudden another deal comes across your desk and you're like, I can't take it because I decided to pay for this one in cash. So
Mm-hmm.
highly recommend using hard money or private money to take down these properties, and especially if you don't have to put skin in the game. And this is easy at that point. Then it comes down to scaling appropriately. And I can't say that
Yes.
enough. There's been too many investors out there that scale too quickly. So just be mindful, slow down, be
Yes.
patient. All of this will happen in due time. You honestly need to gain experience. I promise that Dave has probably tons of stories of just even experiences that he has now where he's continuing to learn how his process could be better, how he can do this more effectively, et cetera. So I can't say that enough. But yeah, I mean, this is a huge opportunity, and experience isn't a factor on this. So technically, a brand new investor could qualify for this 100% financing option. We'd love to work with any of your students or anybody out there that's wanting to get in this space. This is step one in the process. Talk to your lender. Make sure you understand how we're going to evaluate a deal, what we're going to be looking from you. Because to be honest, once you're at 100% financing, gosh, I mean, I need some entity docs. I need a bank statement that covers closing costs and a little bit in reserve so you can get the project started once we close. Because Hard money funds, your rehab's put in an escrow, and that is drawn on as work gets done, which is honestly the best way for this to be completed. I know that we talked recently about just contractors and trying to keep them honest and true to their scope of works. That's one way to do it. If your scope of work is generated by your contractor and that's what you give to me as a lender and that's how we originate your loan, hold your contractors to the fire. Hey, this is what you gave me. This is not a different project than what you talked about. Now, change orders or an additional repair above and beyond, those things will happen occasionally on some of these projects. But hard money definitely allows you to kind of keep those budgets honest, keep your projects on track to close and try to close that deal as quickly as possible.
You're speaking our language, and this is what we talk about on this channel. And if you've been following for a while, Liz is saying a lot of the same stuff we talk about. Scaling appropriately. I think trying to scale too fast, too quick is the number one reason businesses fail. And it's not even just in the real estate business. You see this on Wall Street. You see this across the world, right? People try to grow too big, too quick. And then the misappropriation of debt. So debt is like a loaded weapon, right? It could either, completely serve you in your business and set you to new heights, or it could cripple you. So, when you're
Huge.
saying like, to get rehab money in draws rather than getting all your rehab money up front, for somebody who's just kind of getting started, if rehab is somewhat new to you, believe me, you want it that way. We have
Yeah.
lost more money with rehab and construction than any other part of this business. So
Yep.
I like what you said there, Liz, as far as like setting up your scope of work, setting up your contractor relationship around the distribution of this rehab money. It kind of
Yeah.
keeps everybody accountable. So we talked about the front end, we talked about the rehab money a little bit. Let's kind of wrap this up with talking about refinancing the
Yeah.
Burr method. We're super bullish on the Burr method. We've done over $1.7 million in cash out just in the last 10 months alone. We just did a big
Incredible.
class about this. We're teaching people not do it. We've been saying now's the time to do it, even before the announcement of rate cuts and stuff like that. This is how you do it. You build wealth in real estate by buying and holding. The number
Yep.
one regret of any real estate professional, whether it be a broker, a realtor, an inspector, even a lender like yourself,
Yep.
the number one regret at the end of their career is I wish I would have held on to more real estate. So the
Happens
Burr
every time.
strategy, 100%. So
Yep.
the Burr strategy and the financing options that Liz is going to talk to us about allows us to buy and hold real estate. This is very important. So pay attention to this part. So Liz, what are you guys doing for the Burr, the buy and hold stuff?
Yeah. So, I mean, and this correlates to what we brought up today. This is where we're seeing potentially, though prime, which is where what the feds are going to be dropping in the next couple weeks, doesn't directly correlate. So prime is actually for unsecured debt or like auto loans or credit cards, those kind of things, or HELOCs. But they tend to follow the same suit. So again, I said before, I'll say it again, rates dropped a full percentage point over in the last 2 weeks. Rates right now are in the 6% range, which is crazy. Everyone should be just running down and beating down my door because honestly, these rates are making deals that didn't work a month ago, just a month ago. Deals that didn't work a month ago now work now. And so for the Burr method, we talked about hard money. You're going to use that to take down the property, rehab it. Now on the backside, you're going to use what's called a DSCR loan. It stands for debt service coverage ratio. And in short, all that means is this is a 30-year fixed mortgage based on the cash flow of the property. To make it easy, we have seasoning periods as short as no seasoning. So that means you could buy the property. Let's just kind of throw some numbers out. You could buy it for 100 grand. You could put 50 into it. You could have an ARV of 225, 250. We're going to be able to go off of that 225, 250 immediately after closing on the property rather than having to wait 3 months. Now, I will say, if you need zero seasoning in the sense of maybe there's like literally next to nothing that needs done to this property, yes, we can use products and lenders that will align with the ability to use that after repaired value sooner rather than later. But to be honest, most rehab's going to take a month, maybe 2, maybe 3, depending on the extensiveness. And so your best terms and conditions are going to be with 90-day seasoning, which
Mm-hmm.
means that we will actually close on our 91st day of ownership. And these are going to get you into a standard cookie cutter 30-year fixed mortgage. We're not tossing you in adjustable rate mortgages or anything like that. This is very standardized. We can go to credit scores. I would say 660 is kind of our sweet spot. We do have lenders that'll go under 660. So please don't not call us if your score is under 660. Just know that it starts to get a little ugly once you get under those thresholds. But anything above 660, oh my gosh, rates are going to look incredible. Cash flow is going to be significant. And I would say most of our investors are looking for about $300 a month in cash flow on the back end in a perfect scenario. Now, if you're running against a perfect BRRRR, which I can't say that there's a ton of perfect BRRRRs out there. And what a perfect BRRRR is whatever money that you put into the hard money transaction, you're getting 100% of that back on the refi. Again, I don't think they're out on every corner, but they're definitely out there if you're willing to be patient and analyze your deals effectively. Those transactions are incredible, and you'll be able to get those funds back and back in your pocket. I would say most transactions that we're seeing that are good BRRRRs is where you're leaving 5 to 10% of the after repaired value. That is what we still feel is a good transaction, especially if you have that cash flow on the back end.
I'm here to let you know you need to start doing more deals with Cream students because we're definitely getting all of our money back. We're doing
Let's
perfect
go.
BRRRRs. We're doing better than perfect BRRRRs because we're buying them so cheap. A big
Yeah.
thing. And I think my core competency, I think the biggest value that I could add to anyone who's brand new to this is how you talk to a seller, get a contract over the phone, and get like a phenomenal deal. Like that is my game. That is the thing I am very good at. And that is kind of what we teach. But with that being said, I just want to ask this. So if I come to you with a deal and it's as is condition, I get a great deal. This is what I do,
Yep.
right? I got a seller. And can you guys lend the money I need for the purchase and the rehab? And then can I convert that into a long-term kind of deal? Like what would that
Yep.
look like? This way I could keep the house for cash flow.
Yeah. So that's going to be a DSCR loan. That's going to be your perfect fit. It's going to give you a 30-year fixed mortgage. It's going to give you a great interest rate. I would say cash out refis up to 75%. You're probably 6.75. I think I quoted out one this morning at like 6.6. That dog hunts. That dog hunts all day
Let's
long
go.
on nearly any deal. So yes, that's going to be, you're going to go from your hard money to a cash out refi. You're going to turn that money and continue investing it, trying to acquire as many doors as your goals are set out to achieve.
Perfect. So if somebody wants to get started with you and like fill out an application, is the best thing
Yeah.
to do to set up a call with you all and your team?
100%. So you'll see my Calendly link. Definitely schedule a call with myself or my team. We have an incredible team that can service you, give you all the education to really make a sound decision. Even if you're new, that doesn't stop anything. Please don't. Take the first step, have conversations with us. Let us assist Dave's education side with some education on the lending side to really get you well-rounded and ready to make that first offer and many more to come.
So Liz and her team, by the way, everybody, I happen to know behind the scenes, they got how many deals you got going on right now? 100?
Yep. We have 100 deals in process right now, which to put in perspective, most loan officers at any given time have like 5 to 10. So we're killing it over here, but we have capacity. We're ready to take on more. So please don't hesitate. Reach out. Let's get a deal in the pipeline. Let's get something closed.
Yeah. So Liz, her Calendly link will be part of this post. Look in the comments down below. But she makes herself available. Her team makes themselves available. Even if you're new and you don't quite have a deal right now, but you need kind of clarity, you're hearing
Yeah.
things, seasoning, and can you just break this down for me again? Set up a call with her team. They're real people. They're going to take time, educate you on this stuff and just take you to the next level. The best place to learn is just being coachable, being vulnerable. Hey, I don't know what this means. Just ask.
Yeah.
It's totally an open world out there. So, Liz, thank you very much. I know
My
the
pleasure.
today's a big day. They came out with the announcement that the time has come to cut interest rates. It's business as usual over here. It's just
Yeah.
time to step on the gas pedal even harder. And Liz, thank you for being here.
Yeah. My pleasure.
Everybody else,
LFG. Let's go.
we'll LFG baby all day long. We'll see you all soon.